How's it going, everybody? My name is Ivan. Today we'll be talking about one of my favorite companies, Annaly Capital Management. Before I continue, for those that don't know me, I am an investment consultant and I teach stocks, options, anything in terms of investing in the stock market, right? Now, with that being said, let's go ahead and jump into this stock. The reason I want to show you this stock is because of its dividend yield, right? Dividend yield is 9.89%. You can see over here on the right side column. And what a dividend basically means is when a company makes earnings, makes profit every fiscal quarter, um, they, as a gratitude, you could say, as a gratitude to its shareholders, they share this profit with them. So depending on the X amount of shares that you own with Annaly Capital, it will pay you that cash dividend. And if you go to their website over here, this is public information, by the way. You don't have to pay for anything. You just Google Annaly Capital dividends, and you can go to the investors section. It's usually investors or investor relations for any stock company. And you could go right here in the bottom and I highlight it right here, the most recent one for September 29, amount 22 cents, right? And it's consistent, it's every quarter. It usually changes, but you have to check how much. So this quarter they're gonna pay 22 cents per share. So let's say that you have 100 shares, you will get $22, right? So let's just do the math so people can see. 100 times 22 is $22, right? So if you have 100 shares, this coming, what's the payout again? Excuse me, the pay date is October 29. So this October 29, you'll get 22 cents, excuse me, $22 in cash, just 22 bucks for owning 100 shares of Annaly, right? Depending on who you broker with, if your broker has a DRIP plan, a DRIP is an acronym for Dividend Reinvestment Plan. If you have a DRIP plan with them, you can automatically reinvest those $22 into whatever share amount that would be, right? So let's go ahead and calculate this $22 divided by share price, 882. You will get 2.49 shares, right? So it will automatically buy 2.49 shares, right? So that's the good thing about dividends, right? You get some cash as a show of gratitude for being their shareholder. And if you have DRIP with your broker, if you're brokering with Fidelity, Schwab, Robinhood, Acorns, if they offer DRIP, you can set it so that it automatically uses those $22 that you made, it purchases and makes a purchase in share amount, in stock amount, right? So today I'm going to show you in my workshop how to look for trends, right? How to look for price movement, how to make an informed decision, right? Kind of predict where the price will move, right? Again, now nobody knows where the price is moving. The only thing that you can do is uh, an approximate decision, right, of where the price is heading, whether up, down, sideways. And today we'll be talking about the moving average, right? So I'm going to show you three different lines. We have the blue line, which is the 20 moving average, the purple line, which is the 60 moving average, the yellow line, which is the 200 moving average, right? Now, what is a moving average, right? It's a statistical uh, method used to smooth out stock, in this case, the share price, depending on the length of the day, right? We have the official definition, but it's a lot of technical jargon, right? The average is taken over a specific period of time, depending 10 days. Simple technical analysis tool that smooths out price data by creating constantly updated average price, right? So let's go back over here. So depending on the length of the moving average, the shorter it is, this is the blue line, this is the 20, the shorter it is, the tighter it gets to, it tries to hug the share price. So let's do 20, and then let's go down, and you can see, look at the blue line, and then see how it closely changes, starts to behave and move as the stock price. But let's go back again to 20. Now my strategy, this is a freebie. I'm going to show you what I usually use is the 20, 60, 200, right? 20, 60, 200. Because it tells me if the blue line jumps over the yellow, there's usually a movement in an upward trend, right? Let me draw you real quick right here and right here. You can see both the blue and the purple going above the 200 yellow moving average. When you see that, right, if it crosses, right, if there's a divergence, if there's a crossing over up, usually I would say with a 70% certainty, the price will certainly go upward, right? Now, conversely, let me bring out my drawing tool again, if both lines cross over downward the yellow 200 moving average, the price would most certainly will go downwards. Again, this is, I would say, 60 to 70% accurate. And most of the time it is true. Now, there's many factors into play as to how consistent, how subsequent the price will stay upward. This is when the purple line comes into play, because the 60 moving average, which is the purple line, again, going back, so we can recap 20, 60, 200. 20 blue line, 60 purple, 200 yellow. If the purple line is crossing over the blue line, it's going to show some consistency with the price movement, right? Again, this is not always the case. There has been instances where that doesn't play into this. Usually it could happen anyway, but it's usually I would say 60 to 70% certainty. Now the other thing that I want to show you is another indicator that I like to use, and right here, this bottom part. This is the 60, excuse me, this is the CCI. This is the CCI, the Commodity Channel Index, right? This is another indicator, right? This indicator tells you whether a stock is overbought or oversold. You can see these two bands, upper band, lower band, and you can see the blue line, right? Now, the strategy I use is a 50 length, right? It's basically, like the moving average. You can modify the length as well. And you can see upper band, lower band. I use a 200 and minus 200, right? The default setting is a different one, but this is the one I use so it can create more accurate signals, right? Now, I'm not going to dive in too much, so I won't oversaturate, overload you with a lot of information. But essentially, the CCI, the Commodity Channel Index, by the way, you can look for indicators over here in the top where it says indicators. I already have set up all of my favorite indicators. Going back to CCI, if the blue line crosses over the upper band, let me bring out my drawing tool again. If it crosses like this, there's usually a signal that it's being overbought, right? Now, conversely, if it crosses the lower band, it is a signal that is being oversold, right? Now, one key takeaway that I want you to guys remember is the blue line is always going to jump back into the middle, the middle, right?